The US elections are more than just a democratic process. It's an event that shakes up the entire globe, the major economies, and a lot of geopolitics. In this video, we're going to take a deep dive into the US elections, specifically on how it impacts the market, so that we're in the know of what to expect. The market has become more sensitive to US presidential elections unlike never before. In order to fully understand the scope, or at least have a glimpse of how the markets are going to react this time, we need to go back in time. In 2016, the US surprised the world.
This means that Donald Trump will be the 45th president of the United States, winning the most unreal, surreal election we have ever seen.
Trump, who had not vied for any prior electoral seat, became the US president. And the market did have quite an unusual reaction to this. Now, ideally, US elections, typically the reactions do not last over a long time. Usually the impact or effects die down as investors stand back to looking at economic fundamentals. However, this was different when Trump came in. Apart from his tweets that sometimes used to move the market, he also had very outside the norm policies, such as building a wall, and this did create some back and forth in the market. For example, we did see the Mexican peso drop dramatically on the announcement or after he was declared the winner of the elections. And this unusual sensitivity to a president, especially a president-elect, was something that for most investors was quite new. From the tweets to the out-of-the-box policies that he came up with. On the aggregate, however, we did see a lot of interesting moves in the markets. So what is the Trump trade? This is how the market will respond from economic policies and political decisions associated with a Trump presidency. Going back to the previous Trump's presidency, we did see some interesting sectors outperform the market during that period. For example, we did have technology stocks, financial stocks, and energy stocks. And these can be associated by now a typical Trump presidency. If you look at the dollar, the fact that the US economy has been very strong as compared to the other economies, and the fact that we expect a slower pace of cuts, and coupled now by the fact that the market was or is expecting a Trump victory, had us see the dollar rally against the other major currencies. However, as we came to the end of our last week, we did start seeing the polls showing a narrower lead between Trump and Kamala, and we did start seeing the dollar weaken again. Now, why exactly is the dollar strengthening? Because of an expected Trump win. We do expect that Trump's presidency is going to come with tax cuts and tariffs, and this is going to be inflationary for the US economy, and it's going to deter the Fed from cutting very hastily. And that is why the market was pricing in a stronger dollar as the odds of a Trump presidency increased. The same can be said when you look at the bond markets, where you've been seeing the yield, especially on the 10-year, increase in step with the US elections or the Trump elections odds. And this is because of the same reason, or the same thinking really. If Trump is going to come in and you're going to have those inflationary policies, then the Fed is going to be very careful when it comes to cutting rates. And they're probably going to do it slower. And that expectation is what is driving the yields back up higher to where they were. And this is what we've been seeing in the last couple of days. We've had this market sell-off in bonds, and it's probably tied to that odds of a Trump presidency victory. Apart from the broader macroeconomic theme, there are still intricate details that go or happen in the market based on these policies. The first one, for example, is defense, where Trump's comments on things such as the NATO spending or commitment, for example, to Ukraine, might also affect companies like Lockheed Martin and their share price. In other policies, we look at tariff exposure, for example. US companies that rely heavily on the Chinese market, for example, might be heavily impacted due to potential tariffs that might come their way when a Trump victory is in play. And lastly, we have things like oil, where comments on Iran and Israel by Trump might heavily impact how the tensions proceed. Remember, in our previous episodes, we say that it's uncertainty that drives, for example, gold prices and oil prices higher, and not necessarily the conflict. And if comments might create more uncertainty around this period or during a Trump's tenure, then that might lead to an increase in crude oil prices and gold prices. So while the Trump trade might seem broad, we are just looking at policies and what companies or what commodities or products will be affected based on these policies. On the niche end of things, we've seen, for example, Trump's support for Bitcoin, which has also moved in tandem with the potential Trump victory in play. If at all we see a Trump victory, then it's important to rethink how we view the markets in light of what the Fed is going to do and how the president or the presidency is going to also shape policies going forward. Having said that, thank you for watching this episode of the Market Watch series. And if you want to trade any of these assets, you can always visit hfm.com or the description below this video. And see you in the next one.